Welcome back to Market Call. Now it's time for Teal Linde's top picks. So first out of the gate here, we have National Bank of Canada. Why did you choose this name?
Well, National Bank is the sixth largest bank in Canada, so it's not one of the top five. But in terms of shareholder performance, it is the number one performing bank, the top six in the last 10 years, 12 years, and 15 years, based on share price appreciation, even if you include the dividend as well. So it may not be the largest in size, but definitely number one in terms of share price performance. And there's a couple of reasons for that. Is that unlike the big five, are expanding in the United States, and the U.S. market is very, very competitive, and the profitability levels aren't as high. And so national banks are primarily in Canada, and even better, they're mostly in Quebec, where they even have less competition than you would find with the banks in other provinces. So they have higher profitability levels, and because the valuation of the national bank is lower, their dividend yield has always been higher, and they're able to buy back more stock as well. And so it's a stock we've owned for many years, and we continue to like it. And because of the sell-off of the bank stocks lately, it's the top pick today.
Okay. Next up in your top picks, we have Air Canada. I just flew recently, and obviously we know all the problems that many of the airlines are having. Air Canada is one of them. Why did you choose this name?
Yes, Air Canada. Well, it's interesting that Air Canada in 2020, their revenues were down over 90%. Okay. Now today the revenues are down about 9% to 2019 levels. So huge improvement. And yet, because of this panic attack in the stock market we've seen in the last couple of years, last couple of weeks, Air Canada stock is back in the teens, which we haven't seen since 2020. And so again, this company is doing much better than it was back in 2020, and the stock is back down to 2012. It doesn't quite make sense. So we think it's drastic. We think it's oversold. And when the market sort of normalizes and the panic subsides, I think there's upside in Air Canada, particularly as the company sort of deleverages as well. That's going to provide some more upside on the equity.
Do you think there's a bit of an overhang right now with all the issues we're seeing at the airports across the country?
Yes, there is an overhang, but what's interesting is that the capacity of the airlines is so tight that they're able to charge these relatively high prices. And they've got all this pent-up demand. So you got tight capacity, pent-up demand. Again, it doesn't justify a stock to be so oversold when you have those kind of circumstances. Not a great time to be traveling, okay, but if in terms of selling tickets or as an airline, they probably have a pretty easy job doing that right now.
Yeah, I suppose as long as you're not working at the customer-facing booth right there when the flights are all getting delayed and canceled anyway. Let's get to your last top pick. You were talking earlier about the Canadian energy patch. This is in there, ENSIGN Energy Services. Why did you choose this one?
Well, this one's a simple thesis. I mean, natural gas prices are at 14-year highs recently, and oil's at an 8-year high. And ENSIGN, it hasn't even cracked a 3.5-year high. I mean, just over 3 years ago, it was at $6 a share, and today it's around $3.50. And so I think that even if there was a ceasefire in Ukraine, I think the oil markets have sort of changed permanently, where there's going to be demand for oil and gas services for years to come, and the drillers are going to be beneficiaries of that. And so ENSIGN is a stock we own, and we continue to like it today.
And why ENSIGN over some of the other services companies?
Because, a couple reasons. I mean, ENSIGN is a highly leveraged driller, but that's a risk. But when things work out, you have greater upside. And we also like the fact that Murray Edwards owns over 20% of the company. So when you consider the high leverage, and you consider that Murray Edwards and his access to capital for the company is probably pretty sufficient. It gives us comfort in owning the stock when we first bought it back in March 2020 at 52 cents.